Hi traders, this is Gomathi Shankar. I am very happy to meet you all in a new video. In this video, we are going to see Banknifty review for current week. In Twitter on September 19, I posted a very important tweet about weekly and monthly CPR, and that too focusing on Nifty. So let's check out the tweet. Weekly CPR breakout. If weekly CPR is broken either on the upside or downside, we can understand that the trend is getting weak. For example, if weekly CPR is getting broken from the top to bottom, we can understand that bulls are getting weak. And if the weekly CPR is broken from the bottom to top, we can understand that bears are getting weak. Now at the same time, let's come to monthly breakout. Whenever a monthly CPR is broken, either on the upside or downside, that signifies the trend is changing in the overall market. For example, if monthly CPR is broken from top to bottom, we can understand that the trend is going to be bearish, and now the trend has been shifted from bullish phase to bearish phase. At the same time, if monthly CPR is broken from bottom to top, we can understand that the trend is shifting from bearish phase to a bullish phase. Alright, and this daily CPR breakout is purely for entries and exits. Now keep an eye on Nifty. So this is what I said on September 19. Now shall we check what happened in Nifty? Now on September 19, when I posted this tweet, we can clearly understand that Nifty was stuck inside weekly CPR and monthly CPR. The pink color lines which you are seeing is monthly CPR, and the blue color lines which you are seeing is weekly CPR. Now on 19 September, Nifty is struggling inside monthly CPR. So if monthly CPR is broken, then the trend will change from bullish to bearish phase. And now check out the next tweet. On September 20th, I posted that bulls are trying to sustain inside weekly and monthly CPR. Closing above weekly and monthly CPR is the last hope left for the bulls. So this is the closing of Monday candle, and on Tuesday I said that the closing above weekly and monthly CPR is the last hope for the bulls. Now let's see. On Tuesday, the market went up above weekly and monthly CPR, but it failed to close above weekly and monthly CPR. So that shows bulls are literally weak. On Wednesday and Thursday, Nifty was stuck inside weekly as well as monthly CPR, and even on Thursday, the candles broke monthly CPR, but quickly they went inside to avoid the market from falling. But today what happened? As I said in my tweet, the candles broke weekly as well as monthly CPR, especially monthly CPR is broken. So the trend is changing from bullish phase to a bearish phase. Alright. So now what you are seeing in Nifty is a bearish trend because the candles have closed below monthly CPR. Nifty has already broken monthly CPR, but in Banknifty, the candles are still above monthly CPR. So, Banknifty is trading below weekly CPR. It signifies that bulls are literally weak. Alright, but the trend has not changed from bullish to bearish phase because still the candles are above monthly CPR in Banknifty. This is Monday chart, and generally we advise retail traders not to enter in the first 2-3 candles. Don't take any decision in the first 2-3 candles because anything can trap a retail trader in the first few minutes. On Monday, 19th of September, we can clearly see the candles broke daily CPR and the candles were taking support at daily CPR. So this is what we call as a low probable trade. Why we call as a low probable trade is the candles are stuck inside previous day low as well as previous day high. So we are going to take a long entry purely based on the CPR. So what I will do, when the candles are taking support comfortably at daily CPR, when the candles have broken the daily CPR, we can take a entry. So you can take a long position in this bull candle because daily CPR is broken and your stop loss is going to be below daily CPR only, whereas your target is going to be R1 and previous day high. Even if you have not entered in that bull candle, try to enter in this small bull candle because the market is giving you the opportunity to enter a long position. And after that, throughout the day we can clearly see the market is not having, the bulls are not having the momentum, and that's why the market is stuck inside CPR as well as previous day high levels. After that, there is no proper trade opportunity. After that, if you have taken a short position at R1 and previous day high, and if you have made money till daily CPR, it is purely based on your experience and understanding about the market. I will really appreciate that. Now, next day, the market is opening above R1 and previous day high. Obviously, we will look for long opportunities only because the market is getting a gap up opening. We can clearly see the market is opening above previous day high. So generally in a gap up opening, I have said in my Telegram channels as well, what you have to do is you have to wait for first few minutes. You have to wait for a range formation. When that particular range gets broken, you can go for a long position or you can go for a short position as per that particular range breakout. Now let's say, for example, on 20th of September, initially the candles were forming a tiny range, a small range has been forming, no, and then there is a breakout on the upside. So you can go for a long trade, you can go for a long scalping trade, all right, because that is a beautiful breakout from the day high. Because after 5 candles discussion, the bulls are agreeing to take the prices higher. So maybe you can go for a long here and you can quickly scalp somewhere around 30 to 50 points and you can exit out. And same way, you are getting another range formation and you are getting another range breakout. Again, you can enter for a long position and you can quickly scalp out somewhere between 30 to 50 points. And after that, again there was a range formation, but the market did not break on the upside. Rather, what happened, the market was going in a range bound manner. So Tuesday, it's okay. The market was slightly range bound. The market is stuck between R1 and R2, R3 50%, and the market was stuck between R1, R2 50%. So slightly the market was range bound. So we have to play with less quantities. Whenever the market is playing inside a certain level, we have to trade with less quantities only. Now Wednesday, we can clearly see, as per weekly CPR and as per hourly chart, see the market went up towards weekly R1 and previous week high, and again the market is taking resistance and it is coming down. Now the candles are trading somewhere around this particular area. So we can understand that previous week high as well as weekly R1 has given some resistance. Now already previous week high and weekly R1 has provided resistance for the candles. Now in 5 minutes chart, if you observe, once again daily CPR is acting as a tough resistance. Daily CPR is not allowing the candles to go up, right? So what I will tell is, since whenever the candles are trading below daily CPR or whenever the candles are trading above daily CPR, you can take it as a quick long or short opportunity because your risk is going to be very less. Now here what I will tell is, as soon as you see a bear candle here, or at least in the second candle, you can go for a short opportunity with your stop loss above daily CPR or as per your risk appetite. Maybe 30 to 50 points in options, you can try some risk. And then you are going to exit at S1 and previous day low. So your first trade is done, you are exiting your trade. Now S1 and previous day low is broken. Now few people would have not taken any short opportunity in the first trade setup. So S1 and previous day low is broken. That is a good entry. That is not at all a bad entry. Place your stop loss above S1 and previous day low. Now here your stop loss is hit, right? Now once again when the market comes below S1 and previous day low, once again when the market breaks that particular day low, you can go for a short trade and you can easily scalp out till S2, or even you can try somewhere between 30 to 50 points scalping in Banknifty. So though you have lost your money here, you would have made money in this short trade. So your trade is done for that particular day. If you have taken a trade here as per my first setup, then still you would have made money. So you would have made money here, you would have made money here, and you would have lost your money here. So still you are making some good money on that particular day. Now on Thursday, expiry day, same as Wednesday, the market is taking resistance at daily CPR. Same logic. You can take a short in this doji candle, or you can take a short at least in this bear candle, right? And you can risk somewhere between 30 to 50 points in options, or you can look at the candles, you can look at the size of the candles. If the size of the candles are very big, then you can keep 50% of that bear candle itself as a stop loss. Okay, so you can plan as per your risk appetite, and you are going to scalp till S1 and previous day low. So here your first trade is profitable. Now second trade, again S1 and previous day low is broken, you are going for a second trade. Again your second trade is profitable because you are going to take a short. Maybe you are going to scalp till S1 and previous day low 50%, or even if you have waited till S2, your target is reached. So both the trades are profitable on Thursday. On Thursday it is a beautiful expiry day, and S2 is also getting broken. So what you will do, again you can re-enter, you can take your third trade. You are going to scalp till S2, S3 50%. You are done for the day. Alright, after that, so again the market is breaking S1 and previous day low. Can I take a short opportunity? No, please don't over trade on any particular trading day. Alright, restrict yourself from taking maximum of 3 trades for that particular day. And today, what are the trade opportunities we got today? Right from the morning, the market has been falling. Now in the morning, I advised everybody to take a short only when previous week low and S1 is broken, because last time in my Telegram channel, why I advised you to take a short when previous week low and S1 is broken is, now here we can see on Tuesday the market approached weekly R1 and previous week high. As soon as previous week high and weekly R1 levels are reached, the market started to reverse. So sometimes the market will reach previous week low as well as weekly S1, and there are chances of reversal. So if it is reversing, you would have lost your money, and that's why I said wait for previous week low and S1 breakout as well. So previous week low and S1 is also broken. Now S1 previous day low is also broken. You are going to take a short position, and your first trade is going to be a profitable one. Anyway, you are going to scalp somewhere between 30 to 50 points. Alright. Now here again S2 is getting broken. Let's say your first trade is profitable and you exited at S2. Now looking at S2 breakout, again you are entering in the second trade, and your stop loss is above S2. Generally you have to keep a stop loss above S2, as well as you have to give some buffer point, because I have seen a lot of beginners, above S2 or above previous day low and S1, what they do, they keep their stop loss neck to neck, or they keep their stop loss directly at previous day low and S1. And I have seen a lot of traders, they keep their stop loss exactly at S2. So that is not the right practices. Whenever you are keeping a stop loss, make sure you give some buffer point, alright, or To keep it simple, you can divide the S1 and S2 range itself into three segments. Like this is 25 percentage, and this is 50 percentage, and this is 75 percentage. Like this, you can divide into three segments, and you can keep your stop loss at this 75 percentage level. All right. The point is, make sure you give some buffer point for your stop losses anywhere, whether you are placing your stop loss above CPR or below CPR, below R1 and previous day high, or above S1 and previous day low. Wherever you place your stop loss, make sure you give some buffer point. All right. So here your first trade would be definitely profitable. Your second trade at S2 breakout, depending upon your stop loss. If someone has placed your stop loss very closer, your stop loss would have been hit. And if somebody has given some buffer point, then your stop loss wouldn't have been hit, and you would have made money. Now again, the market is breaking the day low at this particular point, and after that you can see there is no momentum for the bears. No, the market was slowly going towards the downside. Maybe you would have taken a short here, and you would have placed your stop loss, and if you have waited for S3, then your target would have been hit. So overall today the market is good. The market is not zigzag, or the market is not volatile. The market is not confusing at all. The market is one-sided only today. So these are the trade opportunities we got for the current week. Now what can we expect for the upcoming week? Now still 1 week is left for the month of September. So anything can happen in a week, because now Banknifty is staying above monthly CPR, whereas Nifty has already broken the monthly CPR. So monthly CPR, we have to expect monthly CPR to give support for Banknifty. Now this particular week, yesterday and today, Banknifty were trading below weekly CPR. So there was some weakness in 5 minutes chart. There was some weakness in intraday because they were staying below weekly CPR. If next week, if the candles are staying below weekly CPR like this week, then again there will be weakness. And if monthly CPR is not giving enough support for Banknifty, and if monthly CPR is broken, then definitely the trend is going to change from bullish to bearish trend, and we can expect some fall in Banknifty as well as Nifty. Alright, so CPR alone is more than sufficient to make money every day. So that's it guys. I hope you all liked my Banknifty review. Let's see how the market gives us opportunity for the next week. Thank you. Thank you for your love and support. Together we grow as a price action trading community. Bye.